Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is Susan Fuji of Kung Fu Finance. She is a former technology executive. She is an investor, and she is an SEC accredited investor, and she started the website Kung Fu Finance. So thank you for joining us here today, Susan.
Thank you, Jason. I'm glad to be here.
Great. Yeah, and I'm finally glad to be speaking to you, even during the storm here that we're having in the D.C. area.
Right. Oh, my gosh. I can't believe it's so powerful.
Yeah, well, we're hoping the power doesn't go out during the interview, so we'll try to get a good interview here before the power goes out.
Sounds great. I'll talk quickly.
So, Susan, our listeners are not familiar with you yet. You've gone to a lot of conferences, Casey Research and Stansberry Associates. Tell our listeners about your background as a technology executive and what got you into then gold and silver after that.
Sure, no problem. Well, I graduated college in 1996, and I got my degree in computer science. And my first job out of college was a technology job working for Intel out here in the Bay Area, which is where I live now. And so working for Intel was awesome. So I was there for about 3.5 years. But what was interesting was it highlighted just how little I actually knew about investing. As an Intel employee, even as a lowly sort of recent college grad, you're paid with part of your compensation is stock options, and they also have, the employee stock purchase plan, and you have this mysterious 401k, and suddenly you're introduced to this kind of world, brand new world of investing. So I worked for Intel for about 3.5 years and fancied myself quite the investor because I was, participating in the 401k and, getting all these Intel stock options, and the market at that time from 96 to about 2000 was just going up, up, up. So I thought I was quite the genius, but I knew nothing at all. I mean, really nothing about stock market investing, just absolutely nothing. I didn't know what price to earnings was, price to book, any sort of even remote ways of valuing a company. And actually, back in that day and age, people had kind of thrown those valuations out the window anyway, saying, oh, well, those don't matter anymore, because it was all about eyeballs, right? Who could get the most viewers online. So I worked for Intel for about 3.5 years, and then I left and went up to San Francisco and joined a dot-com startup. And there I was managing a team of about 70 people and making a great 6-figure income and, riding kind of the dot-com wave up, 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 and then, of course, boom, down, 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 down. And, basically when the NASDAQ crashed, I lost all of my money. Everything I had been working for since I graduated college was just gone. I mean, poof, at least, how far did it dip? 60% or something. It was really terrible. And for me, that was a huge, huge wake-up call. Huge.
Yeah, and the thing about the whole internet bubble, and this is something that Sir John Templeton talked about, is the 4 most dangerous words in investing are, this time it's different.
Right. Exactly. Yes. And so for me, it was just a huge, huge wake-up call. I mean, I had literally thought that that's just what you did to get rich and that all I really needed to do was to keep investing all of my money in the stock market. And, I bought Cisco shares, I think, at $70 and more Intel shares at $50 and $60. And, those still haven't come back. My husband works for Cisco now, and the shares are not even $20. It's so pathetic how dumb I was. But at the time, I had no idea, and we're not taught about investing in school, and I certainly didn't learn about it at home. My parents were very conservative. They just, had CDs, and they thought the stock market was for gamblers, and so I just really had no experience or exposure to how to invest at all. So that was such a wake-up call for me. So that was definitely what motivated me to get started learning.
And as process of your journey, the discipline you started building blocks, building a base, and building a knowledge base, and that's what led you to the Kung Fu Finance website then, and why you decided to name it the way you named it?
Yeah, pretty much. So I really sat down and I had kind of this come to Jesus moment with myself about, hey, what do I really want to do? And, I've always, I guess, kind of had expensive tastes. And I'm like, this is ridiculous. I'm making a decent amount of money. Why can't I keep it? And at the time, I didn't even know how much I had or didn't have. I wasn't creating monthly personal financial statements. I mean, I was doing the minimum. I was responsible enough so that I paid off my credit cards every month and things. My parents had sort of instilled me with that. But even at that time, I had sort of gotten lazy and, I'll just send in the minimum this month and I'll make it up next month. And, I discovered I was about $10,000 in credit card debt and just going, what on earth am I going to do? And around about that time, I was also taking a kung fu class with a girlfriend of mine in the city. We were taking Wing Chun, and I was living with this guy who was like a total Bruce Lee fan. And so we would, go out, come back, watch Black Belt Theater, and just, it was really fun. So I think that was kind of percolating in the back of my mind, this whole kung fu idea. But at the time, that's when I just started really focusing, like you said, on building a base of education. I took a commercial real estate course at UC Berkeley. I took Intro to Financial Planning. I started reading. I read all these books by Robert Kiyosaki. I read, I think, David Bach, The Automatic Millionaire. I read all the books that Robert Kiyosaki recommended, and one of those was The Creature from Jekyll Island. And that was an amazing book, and it's the first book that sort of opened my eyes to this idea of, hey, maybe the Federal Reserve isn't necessarily on my side, right? Maybe the government isn't necessarily on my side. It, just caused me to question some of these long-held assumptions that I had had. So that, I think, was the start of it. And from there, those books sort of led me to Mises and Rothbard and Doug Casey and hard assets and fiat money and all of that, which was really, really helpful. So
You have now I don't have an exact as the Bruce Lee movies and stuff like that, but I do have a similar background. I worked in financial services for 6 or 7 months, and I trained and I sat in the sales meetings, and they don't teach anyone any financial education in there either. That's the funny thing. That's the dirty little secret about the industry. Those guys get the accreditations, they get the licenses for studying, but really it's just a sales job. You're handed a piece of paper. You're told to sell whatever the highest commission stuff is. And if you have a background like you or me, if you have an education, you want to learn, stuff, they're going to fire you.
Wow.
That was my waking up period. That and the stock market crashing in 2008. When my parents lost half their money, literally in half their investment capital in 2 years when the market crashed. But not 2 years, but in
right.
12 months. And
right.
then the funny thing is, like, while I was learning, I made them all the money back, and then I produced a profit for them while I was learning. But I'm the exception to the rule, and I did have to put in all the research work similar to you. Like, I had to read over 50 books and thousands of articles, hundreds of podcasts, over 100 documentaries to figure out what was going on. And I had my wake up moment too. And it's really refreshing to hear the wake up moment, but unfortunately it's just so uncomfortable to have the wake up moment because you're surrounded by people who, when you try to ask them if they're waking up too, they don't want to wake up.
Right. That is definitely true. I remember, and this was like many years ago, when I started buying silver for the first time, and people just thought I was crazy, right? Even my husband was, who you would think would be the first one on your side or whatever, and he is. He's very supportive. But I remember having this discussion about, I want to go to the coin shop. I think we should buy some silver. And he was like, coin shops? Do they still have those? I used to buy baseball cards there, just kind of this total, like, what? You want to do what? And, so I've definitely experienced that frustration myself, just with people not really wanting to wake up and, still going, well, it's okay, the stock market, it'll come back, everything will be fine, just buy and hold, wait it out. But a lot of people, probably like your parents, and I know my own, don't have the time to wait it out, right? They're already in their retirement years. My mom turns 75 this year, and, she doesn't have another 20 years, to wait for everything to come back. I mean, she needs to earn some yield now, and it's so difficult for her. But
exactly, and the Fed is destroying the easy savings where in the past you could have gotten 5 to 10% returns on a treasury or something like that. That's being completely destroyed.
Exactly. Yes, and it's so sad. And like you were asking about, why Kung Fu Finance, and I think I was so frustrated through my own learning process because like you, I had to read, the 40 or 50 books and all these different articles and all the online videos and just search and seek out all this alternative news. And there wasn't really a site at the time I was going through it anyway that really sort of taught you this stuff, right? That really taught you there's no like investment university or how to become a good investor or how even just not to lose money, right? I think there was the Motley Fool maybe, but it was a lot more sort of personal finance focused, right? Like how to get the best mortgage on your house or how to get the best deal on this or that, but it wasn't really about, alternative investing. They did do a lot with the stock market, I think, but that was about it. So I was so frustrated. And so for me, it just, that's what pulled it together. I'm like, I've got to help people.
Yeah, I mean, you can help yourself and help others at the same time, and that's basically what I wanted to do. But what I noticed about the internet, and you brought this up as well, is that there's really not one website that has all the information in one place. I mean, like, even if you go to all the mainstream websites, they might have a good amount of the information, but they're not even going to talk about the Austrian School of Economics. They're not going to talk about alternative asset classes that'll get you out of the stock market and out of bonds, and things like that. And that's very unfortunate because the normal conventional asset allocation strategies, I think that's part of the problem.
Right. Nope, I totally agree. Yes, 100%. We've got to now so that over the past several years, I would say the majority of our assets are in what you would call alternative asset classes, and they're not in the U.S. stock market anymore. So, and I'm very happy with that. I mean, since we've moved away from that, we've done so much better. I mean, our returns have just been so much better, and I think that, I hope that more people will be able to catch on to that. So. Okay,
well, transitioning here to the next topic, before we talk about some of those asset classes that you brought up and where you still see value, let's talk about your views of the macroeconomic situation, and see if they differ from mine or some of the other people I read. Do you see the world economy right now basically in like a worsening stagflation, or do you see things differently?
Worsening stagflation is a good way of summing it up, actually. I see the Fed doing everything they can to try to cause inflation, but they're fighting some pretty powerful deflationary forces. And so I think in the long term, I can't see any other outcome than like rampant inflation. And if you look around, if you ignore sort of the government statistics, the, stated CPI, whatever, I mean, and you look at just food prices and gas prices and all commodity prices and everything is going up. Things are costing more. So I think that inflation is coming. But probably right now, like at this exact moment in time, I think stagflation is actually a really accurate term because we haven't seen as much inflation as you would expect considering the massive amounts of money they continue to pump into the economy. Is that how you see it too, or?
Yeah, I see worsening stagflation for now. That's all basically the Fed can do right now because they've done a pretty decent job of managing inflationary expectations and velocity of money. But unfortunately, though, like so much capital is being misallocated right now that the money's still going to the bankers there to speculate with on derivatives and in other investments, that the money's not really going into Main Street, which used to be the original purpose of Wall Street, was to grow productive Main Street businesses, and that's not happening. So I don't see the real economy improving anytime soon, except for maybe a few sectors like technology is still doing pretty good. And there's a few biotech and healthcare is doing pretty good. There's a few other sectors along those lines that are doing pretty good. But the way the world economy is set up right now, especially with the dollar pegs, is that when the Fed creates inflation, I mean, the monetary inflation, almost all the inflation is exported outside the United States, and it's absorbed by all of our trade partners, and then it's slowly imported back here to the United States in the form of higher priced goods and services.
Yes. Yep. I completely agree. Yep. Yeah, it's very sad. It's really frustrating because at the same time, seniors, we were talking about our parents are being forced to chase yield, right, into somewhat riskier investment so that they can have the retirement they originally planned on, and yet it's just such a difficult environment. So, yeah.
Exactly, and unfortunately, the retail money, those are the ones that are woken up, are starting to go into like dividend stocks, which are probably obviously better than owning bonds at this point. But there's still a lot of retail money. The flow of funds is going into bonds.
Yes.
So I think they're going to get slaughtered.
I know, me too. Yes, I think we're reading the same reports. You see, so much money is flowing into these bond funds, and it makes me think of, they always talk and joke about the sheeple, all the time, but I'm just like, oh, why are people pouring their money into bond funds? It makes no sense to me, but you look at all the numbers, and that's where all the money's going, and money is flowing out of, equities, and it is really astonishing, but, who knows?
Well, I think it's because of the conventional financial wisdom that the conventional financial advisors are trying to keep people in paper. It's the inflationary statistics from the government. People believe them too much.
Mm-hmm.
So they're still going to trust bonds because in a rational market environment, if the people were interpreting the real inflation rate, there's no way whatsoever really that stocks, bonds, commodities, that everything should be going up at once. That's not the way markets are supposed to work.
Right. Yeah, they should not be this correlated. It's absolutely crazy. Yeah, but people are not rational, and it's astonishing to me. But yeah, so that's what I'm trying to do with my website Kung Fu Finance, and what you're trying to do too. I love what you're doing, and just trying to open people's eyes and have them look at some other alternative data points and think for themselves. It's really fantastic.
Great, and let's talk more about some alternative asset classes here. Including gold and silver here, what's your opinion of the mining stocks here at this point? Do you think the retail investor should be buying these like individually or through an ETF or through a mutual fund? Or do you think this is mostly a professional market then with all the volatility that's being created in them?
Sure. I think that it's a stock picker's market. So when you say retail investor, I think if a retail investor is savvy enough to understand the difference between investing and speculating, and that person is savvy enough to realize that these mining stocks, particularly the junior exploring mining stocks, are highly speculative, but all of that said, if they do understand that and they're a reasonably sophisticated retail investor, then I think that now is actually an okay time to be buying these, junior mining stocks. I think that you should always buy in tranches. I bought the GDXJ probably, several months ago, and I'm happy I did so. But that's not to say, I'm absolutely prepared for it to go down further. Right? That's how the mining stocks work, right? They're very, very volatile. So I think it's a good time. I really do. In the past history, especially back in the 70s and 80s, the mining stocks really, really, really outperformed the actual metals themselves. So, but they didn't do that immediately. It took until the end. So.
And I think in the past, Susan, that the mining stocks, the managers of mining companies, the CEOs were much better. And now recently, from what I've seen, I've been investing in the sector for 4 or 5 years successfully. A lot of the CEOs have not done a good job getting good return on capital. They've wasted a lot of money drilling if they're an explorer. They don't manage their capital structure well. They give a lot of warrants out that they're unnecessary. And then the producers, the large companies like a Barrick, I don't want to just single out Barrick, but there's plenty of other large companies that'll go out and massively overpay for some of these junior deposits. They'll pay like way, way too much money, and then they'll underestimate CapEx. And then when the deposit's ready to go into production 5 or 6 years later, the return that they were projecting on getting, it's more than cut in half. So I think the industry needs to focus on production and cash flow and paying dividends and returning money to shareholders, and I think that's what will put the bottom in the mining stocks and make them go up much higher.
Yes, and let's hope that happens soon. You and Rick Rule are on the same page. I talked to him a couple of weeks ago, and he was exactly of the same mindset. And, he's looking ahead to see if there might be, a lot more M&A activity, because these companies are just continuing to spend all this capital, and, and they're not able to raise money. And so it's an interesting environment right now. It'll be fascinating to see what happens.
Yeah, it's a very interesting environment, but the most efficient business model that I really like, and we've talked about this company and the business model a lot for our listeners, is the gold and silver royalty and streaming company.
Yeah.
So you're basically buying then a mining ETF of sorts,
yeah.
And the company's picking out the streams for you, and it cash flows faster, it generates free cash flow, and I've been invested in Sandstorm Gold for about 2 years now. So and Silver Wheaton for just about the same time frame.
Yeah, yep, me too. I love Silver Wheaton, Royal Gold, all those are great. Yep, totally agree.
Well, I have one more question here before we let you go. Let's talk about oil then, because or some of the other contrarian investments that you see in the market in terms of asset classes. Where do you still see value besides gold and silver then in the market? Do you see it in other commodities, or are you too worried then about the hard landing in China, or do you see value then in some consumer staple dividend stocks or some alternative asset classes outside of the market?
Yeah, I've actually been looking in alternative asset classes outside of the market. I do see value in commodities, particularly in like agriculture and farmlands, but I'm actually looking, I have a call later today with a friend of mine who's doing a site scouting trip to Uruguay. He's looking at some productive farms down there. So it's commodities sort of, but it's really more actually buying the productive farm versus, buying it on the futures market. But I do see value in that for sure. And with the recent drought and just kind of the continued issues with food shortages and things, I do see some value there. I also like rental real estate here in the United States. I think that, with mortgages being at an all-time low, the cost of money is so cheap, and the percentage of renters is on the rise. People are not able to afford to buy a house anymore. So I think that especially in certain markets where, employment is good and people are moving into the area instead of away from the area, that you can really still find some great deals there too. So that's something that's interesting to me. And I'm looking at some new sort of alternative income streams like tax liens and peer-to-peer lending that are just kind of interesting and definitely outside of the quote norm, for investing. But I see some good value there. So.
Yeah, those are some very interesting ones you brought up. And to talk more about the commodities, which is one of my specialties, I really like the oil stocks because the oil price is just down. The experts on TV, the contrarian in me, the experts are talking about how oil and gasoline could go down another 20%. And you have these large cap dividend paying oil stocks, some of them like ExxonMobil's 3%, you have Total at 6%, and you can get them for a P ratio around 9.
Wow.
And you can get a dividend yield, for 3 to 6%. And for some of these Canadian energy trusts, you can pull in a dividend yield of 10% per year, and some of them even pay over 10% per month. So these are some things that our listeners need to take a look at. Some of these guys do have really bad exposure to U.S. natural gas prices, though. So you got to really do your homework on some of these to make sure that they're not overexposed and unhedged to U.S. natural gas prices.
Right. Yeah, very interesting. That's not a market that I'm terribly familiar with. So yeah, it's fun to get your take. Do you also invest in the MLPs then?
We've put our consulting clients in those. You can earn a really nice return on those. So if you instead of a bond, I think the MLPs and the Canadian Energy Trust are much safer to put a large amount of capital in instead of bonds at this point. We made a consulting client 6 figures, just putting a good amount of capital into that safely in an energy trust instead of a bond because she needed yield.
Great.
Okay, well, in wrapping things up here, Susan, tell our listeners about some of the other. Maybe you have a report available or some of your interviews on Kung Fu Finance and anything else you'd like to share with us.
Sure, absolutely. So my site is focused on financial education and empowerment. And so I have a lot of courses and articles available online, and right now they're all free, which is great. I am developing this white belt to black belt sort of investor education program, which is really cool. This kind of series of videos and an online investor community where people will be able to really exchange ideas and share and learn and talk with one another about how to become a better investor. So I'm excited about that. But yeah, there's a lot of information available there now, so people can, definitely feel free, go check it out. It is all free, like I said, and I spend a lot of time just trying to really demystify finance for people, so explaining really just, in concrete terms, how big is the debt, and, what do all these financial terms mean, and why is yield so important, and why do people care about the 10-year Treasury yield, like why does that matter, et cetera. So yeah, I hope people will find some value there.
Yeah, and I think your website is a really good starting point for our listeners out there who want to educate themselves, who want to teach themselves how to fish instead of being handed dead fish by Wall Street.
Right. Great analogy.
Okay, so thank you very much for your time, Susan, and hopefully we can have you back on again soon for another podcast.
Great. Thank you, Jason. I appreciate it.